Hello and welcome to another brand new episode of What the FinTech, the podcast from the team behind Fintech Futures and the Banking Technology magazine. My name is Cameron Emanuel-Burns, a reporter at Fintech Futures, and for this episode, I'm delighted to say we are joined by Subramanian Naraynaswamy of Wells Fargo. How are you, Subbu, and welcome to the show.
Thank you for having me. Good to be here.
Super. Well, I thought it would be good to first get an introduction from you, Subbu. If you could tell us a bit more about your role at Wells Fargo and a bit more about your prior experience, it would be great to hear about your work within fintech especially.
So I'm an executive director with Wells Fargo, where I manage all of the fraud strategies for personal lending group, which is personal loans and private label credit cards. Prior to Wells, I was with Barclays US, where I got a unique opportunity to set up the credit risk infrastructure and strategies for their first ever retail cards business in the US. And this was the Gap retail card launched in 2022 I'm talking about. Now, to your second question about my work within fintech. Before I made the transition to banking, I spent close to a decade in the fintech world. So I implemented embedded lending solutions for thousands of non-financial retailers. I experimented with a lot of new things. For instance, I was one of the early users of Plaid back in the open banking solution back in 2018, 2019. And I have tried out several new alternative data products. For instance, email address verification assessment and clarity scores, all of them in their very early stages. In a sense, I was doing a lot of digital banking even before the term digital banking started trending.
That's great. Thank you for that, Subbu. Well, I thought it would be good to quickly run through what's on the agenda for today's episode. Well, we're going to be discussing emerging banking and fintech trends, looking at some of the emerging risks and opportunities, but also, as Subbu is one of our judges for this year's Banking Tech USA Awards, I thought it'd be really interesting to go over what goes into the judging process when involved in such award shows. And of course, we will finish with our infamous Fintech Jail. Anyway, let's get into some of these banking and fintech trends. I think let's start with the risks for fintechs going into 2025. So please, Subbu, go ahead.
Sure. So before I kind of walk you through the risks of fintech, right, I want to provide some context on the digital banking that you're talking about. So and where does fintech fits in that? So typically one would associate digital banking with mobile banking. So that's what usually we see, like your mobile phones, you just go there, online checking account, savings account, so on and so forth. But digital banking is so much more. It includes your real-time payments like Venmo, Zelle, or it could be open banking where you share the deposit data between banks and fintechs. Or it can be embedded lending. The classic example is buy now, pay later, where companies provide loans at the time of checkout, or embedded payments. We all know Uber and Lyft. And it can be AI-driven banking. It can be chatbots, fraud detection, financial advices, or it can be credit scoring. Because typically, if you look at in the US markets, FICO score kind of dominates all of the credit decisions. Whereas with the digital banking concept, so you look at the alternative data and then you kind of incorporate into your credit scoring and so on and so forth. So what I'm trying to say is digital banking is a broad term. But here is the thing. All these trends are not just about banks. They're being driven by fintech innovation. So underneath all of it, fintech companies are kind of challenging the traditional banks and creating entirely new business models, right? So that's the focus of the discussion here. Now, I read a very interesting and insightful article in Forbes recently. In 2024, close to 50% of the checking accounts opened in the US were driven by banks and fintechs. And the focus is all on Chime and PayPal, right? But the numbers are astounding. Like, who would have imagined that digital banking and fintechs will compete with traditional banks so effectively? So this is very interesting number, very interesting fact. But one can always argue that the checking accounts that fintechs offer, they are not truly checking. And Gen Zs and millennials are kind of trying out for either low fee or free product, whatnot, right? So it does not really mean that it's not that primary checking account, meaning that's where your salary gets deposited into. But the point being, fintechs and digital banks are going head to head with the established banks, kind of talks volume about the fintech innovation. So I believe it's important to kind of set the context of what digital banking, fintech, and fintech innovation before we kind of get into the risk for fintechs. So now, what you asked me is a very important question, because while fintech is challenging the banks effectively, it is also creating risks for everybody in the ecosystem, right? It could be businesses, regulators, or consumers. And we should talk about it. And I'm glad you asked that question. So my perspective, the key emerging risk is how fintech companies can navigate the regulatory and compliance complexities effectively. So what I mean by that is, if you look at fintech companies, they operate in a very unique environment where regulatory frameworks often lag behind the technology. So if you look at it, that's the nature of the game, because fintech is all about innovation, all about experimentation. You move fast, you fail fast. That's the nature of fintech. So for example, AI-driven lending is evolving quickly in the US, but the regulation has not kept pace with it. So without proper oversight, what's going to happen? It can lead to bias or a discriminatory outcome, especially when it comes to lending. The other area I can think of is AI chatbots, which is what all the robo-advisors use. Now, CFPB, which stands for Consumer Financial Protection Bureau, has provided some guidance on the data collection, I think in 2023 or 2024. However, the adoption of AI chatbots clearly outpaces the regulation. So now there are concerns around AI providing misleading financial information to consumers. So because AI can be a double-edged sword. So the point is that regulation is not keeping up. So there is a little bit of an uncertainty, gray area for fintech companies. And I can talk more examples, and which is close to my heart, which is buy now, pay later. It has witnessed a significant growth in the US in the last 5 to 7 years. Now, if you look at the mechanics of buy now, pay later, most of the BNPL solutions typically operate on a soft inquiry model. And currently, there is no way to zoom into these inquiries. Now, the challenge is, as BNPL adoption kind of grows at a scale where it can move the needle, at an overall consumer lending pie, the lack of visibility into these inquiries can create issues within the industry. Because if you look at it, inquiries are a very good indicator of how hungry a customer is for credit, right? The credit hungriness, as we call it in the industry. So in the US specifically, bureaus are kind of making changes like creating a new reporting structure for BNPL products, etc. But this will take time. Again, the point I want to highlight here is that in my mind, there is very limited regulatory oversight here. So the companies have to kind of navigate their way around it. Final example before I close it, blockchain. Right? And everybody talks about it, blockchain, widely adopted, and we all know the reasons why it's widely adopted. It provides anonymity, immutable ledger, etc., right? So that's all great, but it kind of complicates the implementation of anti-money laundering or KYC, and regulatory guidelines in this area is still kind of evolving.
Well, thanks for that great insight, Subbu. But now let's have a bit more of a positive outlook. Let's look at some of the opportunities that you feel await fintechs and banks going into 2025.
Yeah, sure. So we talked about the risk, but then the question is like, what's the solution, right? How can companies kind of navigate effectively? From my vantage point, right, many fintechs tend to prioritize growth and customer experience because we all know most of the fintechs are venture capitalist funded, VC funded, and they need to grow to get more funding, right? It's like a cycle. You show more growth, you get more funding, so on and so forth. So what happens though is that the growth often outpaces their operational and risk management capabilities. So you don't keep up with your risk management capabilities as you grow. So there is always a gap. Case in point is the new shiny banking as a service model. So we all know what happened to Synapse last year. The downfall of Synapse literally thousands of consumer accounts, consumer savings block. So Synapse is an intermediary in the banking as a service model. But ultimate sufferers are consumers. And the litigation is still going on, right? So in my mind, the only solution to it is robust controls and risk management practices. What I mean by that is, see, I have gone through this several times in my fintech world, fintech life, right? So based on my experience, what I would do differently this time around is would strategically integrate your compliance considerations in each and every step of the process. Whenever building a product design, like compliance should be at the heart of it and not the other way around, not an afterthought. So we should set the bar high for ourselves, and we need to balance between the growth and risk. If you want to see a sustainable growth in the long term, my recommendation is that the solution is the fintech company should balance growth and risk and not just chase growth. I say opportunities everywhere for fintech, but again, for our discussion, I want to call out three key opportunities, right? The first is embedded finance. So there is this famous quote from Andreessen Horowitz, which is a venture capital fund. So they're a very famous VC fund here, that every company will be a fintech company. I think they made this prediction back in 2020, not remembering exactly. I swear by it because I can also relate to it from my personal experience, because where I have seen firsthand the transformative effect of embedded lending. Classic example is buy now, pay later. So you offer a point of sale lending at the time of checkout. The experience is seamless. And then this whole embedded lending concept revolves around providing lending for a non-financial retailer. Take an example, Walmart, for example, right? Walmart have their own fintech, but I'm just using them as an example here. So at the end of checkout, like if there is a buy now, pay later product, instead of you paying with the credit card, you pay with just one single click, you check out. It's all seamless. So this segment is growing significantly. And I do want to call out FinTech Futures forecast. Like I looked at your forecast from 2024, and I think the report says there is this segment, embedded finance, is showing a 25% CAGR, compounded annual growth rate over the next 5 years. I think the report is from 2024, so 24 to 29, right? So that this number is astounding. I mean, an industry growing at 25%. I mean, no wonder there's a lot of VC activity and everybody wants a piece of the pie, right? And then the report also says from FinTech Futures that the revenues from embedded lending are expected to grow from $40 billion last year to like $100 billion in 2029. Look, these numbers are not small by any means, and they directly correlate with the activity we are seeing in the market. I think enough talk about embedded finance. So the second opportunity I see is AI. AI to kind of unlock efficiencies and fraud mitigation, etc. AI does not need introduction. I'm sure all of us use AI in some form or shape or other daily lives, like ChatGPT or Perplexity or an example. But what I want to call out though is AI is the reason behind the increase in digital fraud. I was looking at a report from Statista. So they were saying that in 2023, there are approximately about 1 million instances of online fraud. That translates to roughly about $12.5 billion US dollars. Now, approximately 40 to 45% of those, the digital fraud, are linked to AI. And guess what? They're all linked to Gen AI and driven by your deep fakes. So I understand AI is an opportunity. At the same time, I'm thinking we are fighting fire with fire. Now, you're using AI to fight a fraud with fraud. We'll see. It will be interesting to see who wins, AI or AI. So that's, I'll leave it at that. And then the third thing and the most significant development in opportunity for fintech is open banking and cash flow underwriting. We can talk about open banking, cash flow underwriting for days. So I want to keep it at a high level for our discussion today. So if you look at it, open banking is a quintessential example of fintech driving the innovation. So typically, fintech lending, again, specifically talking about lending because we're tying it to cash flow underwriting. So fintech lending leverages a lot of alternative data. right? If you look at traditional banks, they stick to your FICO scores and credit bureau. And there are reasons to why banks do that, not getting into that. But one of the key purposes of fintech lending is to focus on non-prime and near-prime consumers with thin or no credit history. And the only way to do that is to use your underwriting deeper. And the only way to do that is to kind of leverage those alternative data. So having access to a consumer's bank account is a gold mine when there is very thin credit file or no credit file. Because everybody has to have a bank account, and 96% of US population has a bank account. So you're sitting on a gold mine. And that's exactly what the open banking framework addresses. So open banking is a framework that allows consumers to securely share their financial data, like your bank accounts, your debits, credits, with third-party providers, which is mostly fintechs. And it's all consumer permission data. So that's this whole open banking concept. Now, cash flow underwriting is a result of the open banking, meaning cash flow underwriting takes the raw transaction history from your deposit account or any other account, and it creates attributes or features that can be used within credit scoring or make some policies or make some decisions. Of course, there are nuances to it. There are regulatory nuances to it. We cannot simply take the entire data and make a decision out of it, right? So we need to tread carefully, but nevertheless, the opportunity is there. The opportunity is bright. So again, in my personal experience, the whole concept of cash flow underwriting is not something new. And again, I have used back in 2010 for a major US bank, I have used the direct deposit data and have come up with risk segmentations, which was 4 times better than a segment if you build it solely based on the credit bureau data. So there are huge benefits to the system. There is no wonder that everybody is moving towards open banking in that direction. And it's here to stay.
I just wanted to pick up on one point in particular you made, and that's on open banking, an area which I think is fair to say the US has been lagging behind Europe so far. However, with Trump's deregulation stance, not only in relation to open banking, but also I know other areas, I'm really interested to hear what your thoughts are on how you feel the Trump's administration efforts to deregulate will impact banks and fintechs going forward.
Sure. It's a hot topic, isn't it? So I understand CFPB is lightning rod in the last month or so. So CFPB was created in 2008 in response to the financial crisis we all faced. The fact is that CFPB is the only federal agency that supervises non-depository institutions like Stripe and PayPal, Venmo, etc. So it will definitely have implications. And we can debate all day long on the pros and cons of CFPB, but the fact of the matter is, it is going to have implications. Again, this is $1 billion question, or may even be $1 trillion. In my opinion, things need to settle a bit before we can truly assess the long-term impact on the recent deregulation initiatives on not just the US financial sector, but across the globe, because there is still a lot of executive orders coming. So things are a little bit unclear, right, and where things will settle. So I think I'm adopting a wait and watch approach to see when things settle, we can assess long-term, how will it impact. But I do want to address specifically about a question on open banking. 1033. So the rule that CFPB came out, I think last year the guidance came out, and then it is effective as of this year, January 1st. But it will be implemented starting April of 2026. There is a 1 year, or I think 1 year and a quarter lag there. But with all the recent executive orders, the future of 1033 is unclear, at least to me, and we need more clarity. But what I want to say is that my point is the open banking is a market-driven and industry-led. So regulation or not doesn't matter. It is poised to move forward because the market is demanding it. So what 1033, all it did was to kind of provide some structure, guardrails around standardization, like a developer interface, et cetera, et cetera. But for a change in this instance, market is leading the way. So I'm absolutely bullish here. It doesn't matter. 1033 is here to stay or not. Open banking will move forward in the US.
Yes, well, a really interesting area. Certainly one for us to be keeping our eyes on for in the near and distant future. But I just wanted to finish this section by asking you if there's any other trends you wish to bring up, anything else that you feel fintechs will be looking into going into 2025.
So one thing I'm noticing in the market is small business loans driven by fintech. If you look at the fintech history, right, from last 10 years, consumer lending was the first domino to fall. And then the same concepts that made consumer lending super successful for fintechs, like alternative data, digital experience, fraud mitigation, they're all being leveraged for small business lending very effectively. So I would say this is a segment to watch out for.
Okay, so we've got to the part of the episode where I think it'll be great to hear from you, Subbu, on what it's like judging on different industry events, which you've done for a number of years now, but particularly in light of the fact that you are judging this year for our BTA USA Awards. I was just wondering why you enjoy it so much. Why do you enjoy judging for these type of events?
First of all, I love judging these events. And to me, it's a great way to stay ahead of the emerging trends and understand where the industry is headed. Because we're all so busy in our day-to-day lives that we barely get time to come up and see what is the industry, where is it moving, and so on and so forth, right? So this judging gives, at least to me, gives an opportunity to understand the emerging trends. And there are takeaways that I can use for my current workplace and so on and so forth. And personally, I see it's exciting to see those cutting-edge solutions, innovations, the fresh ideas that fintechs come up with, that experimentation I was alluding to earlier. I love it. I absolutely love it. And especially with founders, right? They're so passionate. When you kind of listen to them making the pitch, you feel so alive.
That's great. That's really nice to hear. And well, I guess, what kind of company solutions are you eager to see come up during the process this year?
I think I gave away a lot of it. So AI, embedded finance, and blockchain in like SMB, the small and medium business, or it could be like healthcare. Like I see a lot of healthcare AI fintech solutions coming up. They are life-changing. So those kind of solutions. But of course, this is a banking-focused conference. So I'm looking for focused on this financial services, SMB, blockchain, embedded finance, and AI.
Super, some really interesting topics there. I hope that some of them come up during the judging process with us very shortly. But finally, I just wanted to know, why do you enjoy attending these type of events? Is it a good opportunity to network or whatever kind of reasons?
Yeah, so I have attended similar judging events in past years. And what I have always been amazed is the level of insightful conversations at scale. Of course, you do have insightful conversations every day, but at scale, like that you don't get anywhere else. And fintech is evolving rapidly, so you learn a lot in the process. And most importantly, we need to celebrate the success, right? And learn from the best in the field. So that's what I enjoy. And I would strongly recommend whoever is listening to judge these competitions and also attend in person to kind of realize the full value of these judging events.
Yes, totally agree with you there, Subbu. Finally, I guess, any other developments that you'd like to share with us about what's happening with you personally in your fintech world or at Wells Fargo?
I can definitely talk about some of the opportunities, like new developments that I'm working on. So I do a lot of research in fintech area, specifically buy now, pay later and risk management. One of the gaps that I see is when people talk about BNPL, most of the discussions revolve around fintech companies, innovation, how is it increasing sales, credit access, so on and so forth. But we need to remember that BNPL ecosystem is not just fintech companies. It's fintech companies, it's like a triangle. Fintech companies, consumers, and merchants. And more often than not, merchants get missed out from those discussions. And consumer harm does not get talked about at all. In other words, is BNPL doing good or not, or harm for consumers? So I'm currently working with a few leading researchers in the field to develop an integrated framework to address this issue. More to come. But I find it very exciting to address this problem for a fast-growing segment in the fintech market.
Absolutely. It'll be really interesting to see where you take that in the near future. But well, thanks again, Subbu, for chatting with us today. To finish the episode, we have our infamous Fintech Jail, where we ask for an industry term or buzzword or trend that you've seen or simply just heard of and want to get rid of. Or, of course, you can advocate to free one of the previously incarcerated terms. What would your selection be this week?
I'm going to release from out of the jail the word embedded finance. And why? And I've provided good reasoning as to why embedded finance is the future. If something is the future that should not be sitting inside the jail, it should be roaming around free and everybody should be looking at it. And that's my choice, yeah.
Well, I guess it will come as no surprise to anyone that was your selection of what you wanted to free out of the jail. But that does bring us to the end of the episode. And I just wanted to say a huge thank you to Subbu for giving us your time and your insights today. It's been really fascinating speaking with you.
Thank you so much for having me. It's a great session.
Well, that's all we have time for this week. Thank you so much to Subbu for joining me. As for Fintech Futures, you can find us online at fintechfutures.com and be sure to follow us on LinkedIn to keep up to date on the latest fintech news. If you like this podcast and our other episodes, you can subscribe on Apple Podcasts, Spotify, SoundCloud, or your favorite podcast service to get notified about future episodes. Thanks as well to Arama for editing this podcast. You can check them out at arama.tv. And as always, thank you everyone for listening today and for your support. And we'll see you soon for another episode of What the Fintech. But until then, goodbye.